All
Well,
right.
Deven Choksey is with us with what he'd want you to do as we begin this new trading session. Deven, it's a bit like driving through the fog, like in Mumbai, Delhi, etc. Markets lacking conviction, really, right? What are you doing?
Hi, Prashant. Good morning. Well, to me, I think some of the large cap companies, they are appearing ready for takeoff from current levels. They have spent enough amount of time, I think, remaining on a sideways to downside and probably, I think, showing better earnings in the second quarter ended and also promising to show better earnings in the second half, I think, of the financial year, followed by the next year. Two or three main points, I think, out there. On one side, the cost is under control, including the energy cost for the commodity companies. This is giving them a margin advantage, which up till now was lacking in the business. And on the other side, I think though muted in the second quarter, I think some of the companies have actually shown the relative signs of strength as far as I think the growth is concerned, particularly because of the consumption-led spending that is happening in the economy. We believe that I think the higher amount of growth in the second half, followed by the improvement in the margin, which is likely to sustain. We believe that we should be seeing a better second half and followed by, I think, next 4 quarters, that is 26-27 financial year, with higher earning growth. Given that situation, I think it makes sense possibly to buy some of the large cap companies who are showing a distinct character of, I think, showing better performance going forward. Since they have not participated enough, I think I believe that technically also it's a case for, I think, some amount of appreciation, maybe 15 to 20% kind of an upside over 12 to 15 months, distinctly possible in some of the large companies, particularly Nifty 50 stocks.
All right. Hi, Deven. Good morning. Good to see you in. Talking about the large cap, Bharti Airtel. The blocks are not stopping. Business is looking good. You have a lot of positive triggers for telecom. I recall we had a chat with Mahesh Nandulkar of Jefferies on Editors Roundtable. And he was saying that in terms of earnings, cement as well as telecom, they will deliver very good earnings growth in the next year. What's your take on Bharti Airtel? I mean, there's another block, but prospects are good. And the stock actually has been a good outperformer in the last few years.
Yes, I guess, but though most of it is in price also today at the same time, Nigel. And I believe that I think the growth is likely to continue. I think their ARPU growth in the domestic market is showing a significantly high amount of premium compared to the nearest peer, which is Jio. That is another one advantage that they're getting. African operations have started building, I think, relatively better performance over the last few quarters. And that is again giving the confidence that the company is on track as far as the global operations are concerned. But as I said, I think most of the things, including the possibility of ARPU of 300 rupees, I think is already getting into the price now. So I really do not know how much further upside one could possibly ask for. Maybe I will not rule out the possibility of 15-20% kind of an upside. I think along with the other stocks in the marketplace over the next 12 to 15 months' time, even for Bharti. I think so that should be, I think, a good call that one would like to take.
No, I think point taken there. Otherwise, I think we'll have to see where things head. Grow, Deven, any thoughts? Was one of the big volume-led gainers by the end of it. Another name, new listing, Capillary, has done pretty well since listing. I don't know if you've taken a look at it.
So Grow, Prashant, I believe that I think is again everything is in price. I think some of these consumer tech companies, be it in the space of fintechs or investech, whatever you want to call it, yes. I think they have the typical character of, showing the premium valuations in initial months, and then only after a while, I think it tapers down. Maybe it typically explains the trait of fund who wants to basically include the stock into the portfolio for the sake of balancing act, I think, in the investment portfolios. I would not like to possibly chase the expensive valuation, even though everything else looks and sounds, I think, absolutely convincing. Particularly the business environment for most of these companies, I think, which are looking ahead, they are looking very strong because I think today you have got about 1 lakh new demat accounts getting added into the system, which suggests that the distribution business as well as the direct brokerage business both are likely to show better for a company like Grow. In my viewpoint, I think that's a key advantage. However, I think everything is in price. I think today the valuation speaks everything. Maybe 27, 28 earning outlook is covered today in the valuations of the stock. So not very clear whether one should buy immediately or one should wait. I would rather like to wait.
All right. Okay, all right. Deven, I wanted to ask you about a couple of other names. There was so much of debate about Tata Capital, valuations they're coming at, big OFS. But another peer, AB Capital actually, that was trading at, similar or, similar ratios, but at a sharp discount. I think from the time Tata Capital has listed, this one has given 15% returns. And one of the few stocks, AB Capital, is at a 52-week high. Any view on this name and what do you like from this space?
So, Nigel, in general, we find that the consumer spending is increasing, and that is a good sign for most of the NBFC companies, particularly those companies which are having the fintech to their advantage. I would think that the two or three key drivers here. First driver, of course, I think is how quickly you turn around the request for the loan, which means I think how quickly you disburse this loan. And that's where the fintech, I think, which is along with the AI, is basically, I think, is a thing which one could possibly ask for. And that's where champions like Bajaj Finance would remain relatively convincing as far as their ability to disburse loan is concerned at a faster pace compared to others. Second most important aspect is definitely about the cost, because I think that today the liability side is coming down, and those companies which are in a better position to raise money at a lower cost, I think they are ensuring that their margins are likely to remain intact. And the third, and not last but not the least, will be the non-performing asset ratio. I guess I think again Bajaj Finance kind of company is leading the pack in way of I think disbursing loan, which is not proving expensive at the end of the day because of non-collections. So all of those issues I think are very positive. We remain distinctly convinced about the higher amount of spending by the consumer, and that's where some of these companies which are using fintech would be a differentiator in this space. And I think we prefer to go with those kind of companies who are basically, I think, growing faster than the average rate of growth in the industry.